So the selling in the equity markets have basically slowed down, right? We were seeing dip buying in the markets and equities. You're seeing bank stocks. Yes, they have imploded, but you're seeing speculators come in buying the dip. You heard Janet Yellen, head of the US Treasury, basically come in and said the government will always intervene and protect the regional banks, protect any banks, and most importantly, protect the depositors. So don't worry, if you lose your money, we will always protect you. So great. Hard landing is gone with, the crash is gone with, there's no recession, right? Or wrong? Well, if the banks, like we saw, the smaller banks, which are not as heavily regulated as the big banks like JP Morgan, Wells Fargo, Bank of America, not saying that there can't be any problems there. Sure, certainly there can be, but definitely there's more oversight and they're required to hedge as as opposed to the other banks, like for example Silicon Valley Bank, that wasn't hedged on all the assets that they owned, especially the treasuries that lost a lot of value, and they didn't hedge against duration, against interest rate risk. So does this mean that it's over, right? We saw the banks implode, the regional banks. We saw that the government and the Federal Reserve, the central bank, step in. You got an injection of liquidity. So they're putting in more money in the system. So it's done, right? It's over with. Or do we have yet to see the real crash? Now, when we look back in history, I'm not saying this is an exact 2008 scenario. Understand that this is not a 2008 scenario. This is not, we don't have the mortgage-backed securities like we did in 2008 that created this crisis. So we're probably not going to see that, although we can still see, the real estate sector, especially a certain area in the real estate sector, fall under a lot of tremendous pressure and underperform. But most importantly, when you look at 2008, when the first bank failure happened with Bear Stearns, you had Bear Stearns basically fail, and then JP Morgan buy them out. And then after a couple of months, in September, you had a cascading effect of more bank failures that caused the stock market to really plunge. So history doesn't really repeat itself, but it may often rhyme, according to Mark Twain. Can we see the same thing this year? Now, what's the crash? What's the crash that we should be worried about? What's the crash that could come next? What's the next big thing? And a lot of fund managers are starting to worry about shadow banking. So let's go back a little bit. The regional banks that were not heavily regulated like the big banks saw an implosion, and the shadow banks that have no regulation. Well, let me backtrack a little bit. What's a shadow bank? A shadow bank is basically an institution that looks like a bank, quacks like a bank, may smell like a bank, may look very similar in terms of the activities, but is not a bank. And if they're not a bank, they are not subject to the same regulation that a bank has, right? So they don't have all the stringent regulations on their entity. So if they don't have all the stringent regulations, just like the regional banks that imploded because nobody was watching these regional banks, and if you got a regional bank out there and you got depositors giving money to you and you're not really overseeing and looking at the activity that you're doing behind the scenes, then sure, you can expect that greedy management would come in and probably try to make an extra buck or two because of their greed. So same thing with the shadow banking, right? Now, shadow banks or shadow banking sector can be list of many things like hedge funds. You could take BlackRock, Blackstone as an example, mortgage lenders and so on. They have yet to see a big crash, a big issue. I mean, we're seeing the cracks for sure. Let's not forget. Let's count a couple of the cracks, like the UK pension funds. Big issues there. We have also the BlackRock withdrawals. Investors want their money back. They can't because the real estate market, the demand has completely been crushed. Blackstone basically defaulting on their mortgage fund. So these are the cracks. Now, if the regional banks have imploded, why haven't the shadow banks seen something similar as well? And shadow bank industry is not a small industry. It's a very big industry in the trillions and trillions of trillions of trillions of dollars. Definitely way bigger than the market back in 2008 when the shadow banking sector there with the mortgage-backed securities imploded. Definitely way bigger. It's way bigger now today. So if the shadow banking sector is not heavily regulated the way the banks are, and you can expect that, there's some entity out there, I don't know which one, but some entity out there that was really taking advantage and must have been taking advantage of low interest rates for a decade long. And then all of a sudden find out that this high, rigorous increasing in interest rates that came in 2022 basically wiped out a lot of their gains, put them in losses, and put them in a situation where there might be credit issues. Because if you're not making much and your assets are depleting, especially the value of your assets are depleting, and you've got high interest payments to be made, that's when you can see a lot of the effects and a lot of the rollovers, a lot of the implosions start to come in. But we have yet to see it. So it is likely that we could see in the coming months, the next target is the shadow banking area. And what specifically in the shadow banking area could it be? A lot of people argue that it could be maybe commercial real estate. Back in 2008, we had the mortgage-backed securities for residential markets that imploded, right? People were greedy, there was again, it always has to do with regulations. Whenever there's any area of unregulation, 100% there's going to be some greedy asshole that wants to take advantage of the market, wants to make an extra buck or two, and will create probably a contagion effect among other of his or her other friends, right? A contagion effect that, hey, look, I made this X amount of dollars. Oh, really? Let me do the same thing. Let me take advantage of these low interest rate environment, low regulations, and juice up the leverage, juice up our returns, because I'm bored. I need to make a lot of returns. Just like in the UK with the pension funds, right? We're bored of making their usual returns. Let's juice it up with leverage because we're never going to see interest rates high up again. Until 2022 came, until COVID came, eventually led to high inflation, which led to the Fed increasing rates aggressively. So we have yet to see that pain, same pain here this year with the unregulation, with the shadow banking sector, the high rates, the leverage, the cracks you're already seeing in the UK pension fund, BlackRock, Blackstone, and now a lot of talks about the commercial real estate market, which we're hearing with Blackstone defaulting on their commercial mortgage fund that they had, and a lot of commercial properties going under because simply since COVID, people are not going back to the offices, and most people are working from home or doing a hybrid kind of scenario. So it's creating a lot of pain for these property owners. And a lot of people say, just like the mortgage-backed securities with the residential properties back in 2008, we could see the same thing with the commercial market. The commercial mortgage-backed securities, CMBS. And that's the one that may be may be likely to implode next that may cause the next spillover contagion effect, which may also expose the banks that are overly exposed to clients that they have lent money to that are in the business of commercial real estate. And if those clients implode and there's an effect there, then you can expect that the banking sector to also be affected again. So it'll be very interesting to see what comes out. Now, definitely, I can be wrong. Definitely, a lot of people can be wrong about these predictions, but it is looking quite similar to the stories we heard back in 2008. May not be the same, but quite similar stories with, again, always has to be with unregulation, over leverage, greed, low interest rates, and then put that all together over time, you will start to hear the behemoth companies or some large institution that just messed up. And I'm very worried, especially for BlackRock and Blackstone, because those are two big behemoth companies that have huge stake in the real estate market. And especially during COVID time, they were buying tremendous amount of real estate and taking advantage of low rates. And it's very worrisome because you're already hearing their funds of halting withdrawals, can't give their investors any money back. They can't, they don't really want to sell their properties because they don't want to sell it at a lower price. And if they do, right, these companies are worth trillions and trillions of dollars. If they do have to panic sell and get rid of some assets just to pay off their liabilities, that is not a good sign. So shadow banking is something you probably want to look into. Let me know what you guys think. Leave a comment below, subscribe, hit the like button and the bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.